we're going to talk about financial health today, right? It's a big, big part of health because it's absolutely essential to remember that avoiding the stress, avoiding the problems that we have right now, the illusions of us necessarily getting stuck on work that we're doing right now, getting stuck on low income, getting stuck on debts, getting stuck on whatever is stressing us right now. It's having a big impact on our life, relationship. And the thing is, it's pretty awesome that we can break out of this illusion that we can't do anything. And like I like to say, we can take the matter in our own hands, realize that we can become creators, that we take responsibility and we can change it. We absolutely can. And today, Chris will give us the tools, right, Chris?
Yeah, that's right. I mean, just like you talk about making your health personal, you can definitely make your finances personal. And there's so much so many assumptions about financial health and how you need to have money in the bank, that you need to have retirement funds, that all of these things that we built up, these assumptions about how finances work, that you can't control it yourself, that it's too complicated, that you're going to get hurt. Like you talk about simple things you can take to improve your body's health. Well, there are simple actions you can take to improve your financial health that don't cost thousands of dollars, and you can get started today. It's simple, and there's no risk, really. The risk is, when people talk about getting burned by the stock market, it has nothing to do with risk, but it has to do with their personal understanding and the information that they're using to make choices. So the more you understand, the better your choices, and suddenly, there really isn't any risk. So
yeah, I really love what you said. I'm sorry.
Yeah, go.
I really love what
ahead.
you said, that it can be simple. From everywhere I see right now, everything getting so complicated, so many illusions that we can't. And the more information we have, the more complicated it seems. So with me, what I'm trying to do with everybody who's coming to our field, who's coming to my courses or working with me or with you, it can be a lot simpler. There are too many illusions. There is so much information, but the reality, it can be simple and it can be doable, and it's a lot faster than we think, right?
Yeah.
Well, now I'll be quiet.
Well, yeah. And no, the speed is incredible. Like the power that's out there, just like a lot of people don't understand how fast their body can become healthy. People don't understand how much money is flowing out there, and how, there are 20-year-olds who are millionaires, and all they want to do is make it as easy for people to do exactly what they did. Like they're out there, they're trying to share it just like you are, with people, the access to tools that can change people's financial health for the rest of their lives. And, they have the same problems communicating on social media and getting their product out to people because it looks scary. There's all these government restrictions on the information that you're allowed to share. And so it puts a lot of people off. It makes them think that it's too hard to get started. But I'm here to tell you it's not hard. And if you're ready to get started, there are connections you can make. Just send me an email or message me on Facebook, or drop something in the chat, a comment, whatever you need to. Get in touch, and I can introduce you to people who can explain it, who explained it to me, and then they can explain it to you. and really help you getting started as well. And so a lot of the things that I'm going to share today are the tools I use, but there's really a lot out there, a lot of options that you have. And so you don't need to go with the tools I use, but I want to just introduce you to what's out there and the fact that just by clicking a link, you can get started. And also, I've been doing this for 7 years now. So the tools that I'm introducing to you have been around, but they're newer. You aren't going to hear a lot of people talking about it on CNN in the morning, because, in a lot of cases, the newscasters aren't even aware of what's out there. They just get their teleprompter and their cue cards, they read it off. They're not, they're not educating you. It's the news, it's entertainment. If you really want to get facts and information, you have to dig a little deeper. So this is just an introduction. Don't be scared to ask questions during the presentation if you want something explained to you.
And after, when it's going to be on YouTube, they can always ask in the comments, right? Ask questions.
Yeah, absolutely. You can just drop something in the comments. So this is the Personal Investing Masterclass. This is just how to get in, and you can get started today. It's really that simple. Like, all of these tools hook right up to your bank account. You can transfer money. It can be in there as early as tomorrow, and you can start making trades. So you probably don't want to do that. You want to understand what you're doing. We're just going to cover the basics this morning, but you should absolutely get started because there are options out there. There's so much more. The savings account in your bank, like maybe 50 years ago, 70 years ago now, maybe that was an option. But if you have money in a savings account, the best way to use that money is to take $2,000 out of it today and get started with people who can train you on the tools and the techniques to really multiply that money. And we're empowering you with information that it's not a full-time job, but it can absolutely be a full-time job if you want it to be. And then after it's your full-time job, it's not your full-time job because it's as quick as, an hour or two in the morning. You can be done with your goals for the day and you can just move on. And really, this gives you the freedom to do what you want, because making money isn't a full-time job anymore. If you're working 2 jobs, like the way you scale an investment account is you trade 2 contracts instead of 1. Scaling's that easy. As soon as you're confident and you understand how to control risk and how to move forward, it's that easy. Just putting in an additional contract multiplies everything. So if you're like me and there are TVs on in the morning and MSNBC or CNN is on, you may be familiar with a graph like this, and you look at it and you go, wow, that's a blue graph. I hope my 401 is okay. Is the economy doing well? Is it not? Are they telling you the truth? Like, what does it mean? How would I possibly understand how to make money from that? So what I see in the morning, though, is something like this, which looks complicated. It looks like you're flying the space shuttle, but it's really not that complicated. And some of the lines here are actually the lines, the moving average that you see in the other charts. And so this is called charting. There are a lot of people who have been doing this for 20 to 40 years. Some of the trainers I've had, they made their money in the last 20 years, and now all they really want to do is share that with other people. So don't think that it's just for men. The first woman who trained me, Meredith, she was a woman. She had been doing it for 30 years, working in Wall Street, and then kind of went out on her own and really wanted to share it with everybody else. So what is an investment? You may not think of yourself as an investor, but if you have money in a checking account with a bank, you are an investor. You have converted that money into an asset. That asset is a bank account. So point number 2, that asset should be increasing in value. If you're like me, you're getting billed monthly for having that bank account. It's not increasing in value at all. You're not gaining interest. That asset, usually an asset is something with inherent value. So as the currency, as a dollar inflates, hopefully you've heard a little bit about inflation lately, because it's becoming a big problem, and it's a huge part of why you should take action today. But an asset should not be affected by inflation. Like the fact that the dollar is losing value means that tomorrow eggs cost more. If you take your money and buy eggs, then though you still have an egg tomorrow, and you can sell that off for more money than you bought it with today. And so a lot of people have 401ks, retirement accounts. They have an IRA that's money's being put into. You're investing. There's someone in charge of choosing stocks and funds that money is sitting in. Hopefully it's increasing in value. Obviously, like when you begin investing yourself, you should not take risks that are beyond your personal safety. You shouldn't be investing money that you can't afford to lose. There is risk, but there's risk with everything. There's risk in your bank account. So let's go over some of that. So this graph over here is the inflation rate over the last 10 years. You can see that historically inflation has been around 3%, meaning that say you have $1,000 sitting in a bank account. So you put $1,000 into a bank account, you come back to it the next year, that $1,000 is now worth $970. The number on your bank account's the same, but if you aren't earning interest, if you aren't increasing the value of that money year over year, you are technically losing money. And with the stimulus checks and kind of the spending that's been going on the last 3 years for unspecified reasons, you can see that we're now approaching 6%. They've changed the way they calculate inflation. In some markets, like buying food, it's considered at 10% right now. And some people actually disagree with the definitions, that it may actually be much higher than that. So traditionally, inflation is kind of like a force that money is fighting against. And it's the primary trigger for the Silicon Valley Bank failure that recently happened. The bank was investing everybody's money in no risk contracts. So these are contracts that are considered so safe that they have no risk. The problem is that with inflation, the investment couldn't actually make money over the term of the contract. And so when they had to sell those investments, they couldn't cover their expenses. Like, they lost people's money, and at that point, like, everything falls apart. So traditional investing that people are thinking about is, owning your home, using a bank. I don't know if you have a super secret savings account that I don't know about, but most of them are earning a tenth or 100% basically nothing. You have to keep in mind that 6% inflation. To actually be gaining money year over year, you have to look for an investment that is earning at least 6% right now. There are a bunch of options like CDs that banks offer that lock your money in for a duration of years in some cases. And I shopped around briefly to see what they're at right now. 4 to 5% is the highest I saw. So with a 6% inflation, you're still losing 1% a year. So like we saw, Silicon Valley Bank, banks have risk. Don't think just because it's in a bank account that it is safe. Retirement accounts. If you're earning enough money to be preparing for retirement, there are limits on the amount that you can put into an IRA. I don't know how big these numbers look to you. For some people, that's a lot of money. For other people, that's nothing. Like, they max out their 401k in a month, or they have an IRA and a 401k and they're maxed out. The money is locked in though, and if you want to access that money, there are fees and taxes. In a lot of cases, unless you're using a self-directed IRA, you are not in control of that money. If it's a 401k, that is still the company's money. If the company goes under, it's possible that that money doesn't exist anymore. There were a lot of scandals a while ago where the companies had made bad investments, like they had used that money irresponsibly and lost everybody's retirement. And I don't remember anyone going to jail for that. I don't remember anyone going to jail for running a bank into the ground. So the incentive to keep your money safe with what we would consider traditional firms and traditional tools, it's really not the same as it used to be. There's risk with everything. So the difference between a bank and a brokerage is that, believe it or not, the bank is investing your money. When you put that money into the bank, they record that number on a sheet of paper. It's in the database, and the money is immediately out of there. They are investing the money because, remember, inflation. Like, they have people to pay, employees, they've got buildings, they've got expenses. They need to make money with your money. And as such, they do not keep the money on hand for if you want to withdraw it. So a run on the banks is when everybody goes to take their money out of the bank. And so traditionally, and you'll see it, sometimes your bank account will have limits on how much money you can withdraw. They say, oh, if you want more than $10,000, you have to give us 7 days. Well, why is that? Why do they need 7 days to give you your money? Because they have to sell something. They have to transfer money to give you your money back. And so while they're earning interest on that, you're paying them to make money with your money. So a brokerage is a company or an individual. It's like a bank, but they are an intermediary between you and the markets. They, in a lot of ways, they act like a bank. You can get a debit card for your money. They can send you checks. You know, these would be places like TD Ameritrade. There are lots of big traditional brokerages, but when you put your money into your account, that money is yours. You can withdraw that money, and depending on the transfer, it can be in your back in your bank account in as little as 1 day. If you've heard of names like Bernie Madoff or Ponzi, you are aware that there are people who have gone to jail for running a brokerage irresponsibly. So the burden of scrutiny on brokerages is much higher than on banks. So when you personally invest, you have access to options, a lot of financial tools. You can go with stocks, options, futures. You can invest in national currencies or even cryptocurrencies. I'll go over some of these later on in the presentation. Some of them I like, some of them I'm not crazy about. But the misconceptions of it, that it's just for men, it's not. The guy I'm working with right now, I think over 40% of his audience are women, and they are investing. It's not complicated. It looks hard at first, but if you can use a computer, you can start investing. It's not higher risk. There are ways to understand the risk and make sure that you aren't exposed. But the returns, when you make money on an investment, that's your money. And a lot of people say, oh, it was such a hard year, like it was terrible for investors. I don't know, like Hollywood, a lot of people get their information from movies. It is not just a matter of the market going up. You can make money when the market goes down, and you can understand all of this. Like the learning curve takes about 2 weeks. So a market is simple. It looks complicated. They make it sound scary, but it is people selling and buying a good or service. So a stock is a piece of a corporation. Some company out there wanted to generate money so that they can expand their business, that they can grow. And the market, the stock market, is a way of selling a piece of the company to the public. The stock price, when you hear about like how much a share of Tesla is going for, this is just demand. It is who wants to buy a piece of Tesla. You have control. Do you not like Tesla, or do you not like General Motors or Ford? Do you not like the oil companies? You don't have to invest with them. I'd suggest not taking it personally, especially if you are looking to grow your money. But when you invest, you can control companies, and it's completely anonymous. When you're operating through a brokerage, nobody sees your face, nobody knows your name. You are just a number. They are transferring shares, and it's all happening on the internet. You know, you can do it from anywhere. So stocks and ETFs are probably what you're most familiar with. We've talked a little bit about it. All sorts of different things. It's something that is not a company in itself. It is an organization who is then investing in other stocks. And so the most famous one is probably the S&P 500. I don't know if you've heard of that, but there are all sorts of wacky ETFs that do all sorts of things. And there are ways to strategize around market conditions using ETFs. But because they're diversified, that's another misconception, that you have to have a whole bunch of different stocks. You have to have your money everywhere. An ETF can help you diversify. Simply, you put your money in an ETF They're considered safer. You'll see if you chart a lot, if you look at like a wide range of different stocks, you'll see that they're all behaving more or less exactly the same way, because so much of the market is just human behavior. Everybody, all the investors are thinking the same way. And so when you understand how other investors think, you can make money like the other investors. So a stock is simple. You control a single share of a company. It can cost anywhere from $10 to, $1,000, but no company goes out of business overnight. You'll never, I'm trying to remember, like maybe Twitter was the last time something lost a lot of money fast. Disney actually lost money quickly because they made Florida angry. But in general, stocks do not lose a lot of money. Or if they do lose a lot of money, the whole market has lost money. So there are signs that that is coming, and it is fairly slow. So if you see it coming, or if you see something start and you get out that week, we're talking 7 days, you can protect yourself. And another misconception is that you need to have your money invested. Like there are a lot of reasons to keep your brokerage fund as cash, just like a bank. Like you don't need to have it invested, but when you invest, you see profit right away. The growth, you can see 1 to 5% growth a day with stocks. That doesn't seem that great when you look at inflation right now, but it's a heck of a lot better than a CD or something like that. Your money is not locked in. You can pull it back out again that day if you want. There are a number of stocks that pay dividends. So this is interest, more or less. You're getting paid as a product of the company's profits. So there are some companies that offer very high dividends, and people invest in those companies specifically because of the dividends. There are more traditional companies like AT&T, IBM. They're not beating inflation right now, but it's better than a CD, and you have access to that money again whenever you want it. The benefit of using something like an ETF is it's kind of like a mutual fund. It's the same thing that your 401k or your IRA may be invested with, but you're in control. Like if you want to do something else with that money, you can sell it and move on. It's that easy. Options are an incredibly powerful way of investing your money. It is a contract for stock. So one option controls 100 shares of stock, but it's more flexible than stock. Like you can set your price. People are buying and selling options all day, every day. You set the price. It's a little bit more complicated than stock, but there are ways to invest with fixed risk. Like the money that you use to buy an option is the most money you can ever lose. Like if you buy an option for $100, you're only risking $100. You could lose that $100, but you could see it turn into $200 in one day. And there are advanced techniques that you can use with options so that you can be making money when the market falls. You can make money even when the market isn't moving. So in that way, you can basically say, these are the options I want to buy. I'm going to get paid $1,000 as long as certain market conditions happen. you can see that return in 2 weeks, or, the majority of that return. You can pull those options back out and see profit. Futures is another incredibly powerful way to invest. This is a contract on a market, so it's a little bit like an option, but you're controlling one contract at a time. But because of the markets, you can have more or less risk. You can have more or less leverage. You can double your money in a day. And so there are micro markets where basically you're trading at 10% of the market value, and you can start with $100. So what are brokers? Like I mentioned Bernie Madoff and Ponzi a little bit earlier, but those guys are infamous for a reason. There are hundreds and thousands of brokers out there. They're the organization that gives you access to exchanges. So they hold your money for you just like a bank, but it's yours. It's your money. And the SEC, you may know them from Hollywood as the bad guys who come in and haul Leonardo DiCaprio out of the office in handcuffs. They're the bad guy in Hollywood, but think of the last time you saw someone in a movie who worked at a bank getting hauled off in handcuffs. Like, the brokers are highly regulated. There are a lot of rules about how they need to behave. And so when you put your money with them, it's safe. The FDIC only insures your money if the bank fails. And then, it depends like how quickly the government wants to act. When you're working with a brokerage, your money isn't moving unless you want it to. And there are so many younger, hungrier businesses. They aren't banks that have been in business for 200, 500 years. They want your business, and they're offering products that are easy to use. And so these are some of the tools that I use. Earlier, you may have seen the charts I got from investing.com. It's totally free to use. You can set up a chart in a couple of minutes and get the same indicators, the same tools that professional traders are using. And it can help you make very informed trades that have limited risk. There are news websites that actually give you news. You'll see on Forex Factory, they have during the day, there are announcements that need to be made. You may hear about them on the news later that night at 6 or 8 p.m. after the markets have closed, all the damage has been done. You'll see a video of some guy talking, and the newscaster will inform you that the market lost 30% in one day because of some announcement. Well, these websites will give you that report at 10 a.m. when it actually happens. And so you can prepare your investments to actually make money off of bad news. Some of the biggest investors like Warren Buffett, they do that all the time. They're making billions that way. So some of the tools that I've used at the brokers, Robinhood is a really easy way to get started. This is a phone app, so it's kind of like the Instagram of investing. I would absolutely use another tool like investing.com to chart your trades before you make them with Robinhood. But the beauty of Robinhood is it's there in your pocket the whole day. So you're at the supermarket and you see an alert pop up on your phone that a stock you've got has just hit its 52-week high, which is a good sign that they have made a lot of money lately. You can pull your money out, take the profit on that trade with just 2 swipes. And you don't have to be at your desk. You don't have to have a computer to do that. They do not charge commissions or fees. You can make as many transactions as you want, and it's not going to cost you any money at all. And so if all you want to do is put $1,000 in with IBM and start earning 5% on that $1,000, you can do that with Robinhood, and it'll sit in that account for as long as you want it to. Another one is NinjaTrader, which has kind of a cringy name, but this is one of the newest kind of big trading brokers that have their own software. They have really low commissions. Someplace like TD Ameritrade may charge you $10 to move money into stocks, but NinjaTrader, you can trade futures for under $1. It's got all of the charting tools right there in the app, and you can actually trade on the chart. And then there is scripting. So you may not feel like programming your own trading robot, but you could. And there are people like the people I work with that have software you can download, add-ons for NinjaTrader that can make 10% off of your money every day without you really needing to do anything. You can just fire it up and let it trade. So hopefully from all of this, I've shown you really that you can control your finances with as little as $5,000 in a brokerage. You can be making $1,000 a day once you know what you're doing pretty easily with one tool. If you wanted to get started today, there's the idea of paper trading or simulation. So you can get used to tools, you can practice basically off of real market data. You can see what the market is doing. You can begin to understand what that looks like. And you can really become confident that you know what's going on. Like there's a whole philosophy to charting, to looking at a market chart and making informed decisions. And men and women are doing it right now as we speak. They're making millions of dollars. You can control your risk. So once you understand what you're doing, and I mean, I've blown up simulated accounts, losing $100,000 is pretty easy to do, but I encourage you to do it because it really teaches you what's going on. You go, wow, how did that happen? And you understand what you need to do in the future to avoid that. And set your target. Like one of the most important pieces of information that I've learned over the year is that a trader knows what they're aiming for. They understand like why they're making a trade, and when they're happy with the results of that trade. The concept of just chasing after endless amounts of money. The market goes up, you see that you've made the money that you feel comfortable with, and you get out, you've made that money. Like before anything unexpected can happen. Think of it like, flipping a coin. Like there's some element of chance with investing. Heads, you win, tails, you lose. It's more like heads, you win $500, tails, you lose $5. So if you flip that coin 10 times and you lose $50 and then it comes up heads and you win 500, you just made $450. And so if you're happy with that, you call it a day. You don't flip the coin anymore. And it scales as easily as you want. So if you want to double your target, you just do twice as much. So if you're interested in getting started, I encourage you to message me. You can send me an email. You can drop something in chat or in the comments down there, and I will put you in touch with people who are doing this every day, doing it professionally, doing it safely. Just let me know if you're ready to get started, and I will reach out and put you in touch with the right people. So, and also, yeah, if you want to reach out and just ask me, like, what is charting? How do I get started with that? How do I understand what the market is doing? Like, I'm tired of these guys on the news every morning saying, oh, the sky is falling, like the economy's doing terribly. You know, if you're invested the right way, like with options, you can wake up, hear the market is doing terribly, and say, oh, good, my strategy is working. And you can open up your accounts and see how much money you've made from the market moving in the right direction. You can see that the market falling apart is like a 3-month low, that it's where the market was just 3 months ago. And you can see that it's leveling off, that it's about to turn and grow again in, you know, the next 2 weeks. And you can, you know, take out your profits and turn those back into bets that the market is going to improve. And when everybody's surprised the next week, you can be making money as the market goes up. So I encourage all of you to look into this. If you have a little bit of time to learn and a little bit of money to hire someone who knows. Well, thank you. Yeah, Jewel. Yeah, it is a lot to mull over. I do want to kind of blow your mind a little bit. When you break everything down into little pieces, it's really simple. It doesn't have to be complicated. And somebody who's been doing it even longer than I have can really simplify it for you. So if you do want to learn more about charting and kind of the principles that go behind that, so that you can open up a tool like investing.com and see that the Dow is going to come out of its slump and the economy is going to be looking much better by the end of the year. It's unfortunate that sometimes, like when you understand risk, you can have your money in the right place so you can pull it out at the right times. Or great reason to have money in a brokerage ready to go. Like it's earning 0%, let's say, just like a bank account. It's just sitting there in the account. But you see the market come down and it hits this low, and everybody's losing their minds that the market has just gone lower than it has in the last 5 years. Like right after the COVID lockdown started, the market took a huge dive. And so you don't necessarily need to be making money on that decline, but you see it hit that low and you see it start to come back up slowly. You put your money in right then, and you understand that even if it has a little bit of trouble, if it's kind of like having trouble getting off the ground, you can see that and know that eventually it's going to head back up. And so that's what happened after COVID. It took a huge dive, it hit the bottom, and then it shot right back up. It shot up faster than I've seen it go in, I think, since I was born. You know, there's a lot of data out there and you can look at it. That's the other thing. Like all of this data is publicly available. It's freely available even if you don't purchase training from somebody. And I plan on making some YouTube videos about it. So if you want my information, hit me up on Facebook or down there in the comments. I'll give you a link to my YouTube channel. You can subscribe and get ready for when I release more information. And I'll try and break all of this down as simply as I can and address questions moving forward. So that is my presentation. I hope you guys got inspired about that. Like, you can be a work-at-home millionaire, or, a millionaire mom. Like, if your husband has a savings account put aside that's just sitting there in the bank, racking up monthly fees, really encourage you to do something with that money. Like, it doesn't matter male or female, short or tall. You don't have to have physical skills. You don't have to travel anywhere. You need a internet connection and how fast you can make money. A lot of people talk about the risk, and that is a real concern. The risk is something you have to be careful about. But when you know what you're doing, the opportunity is incredible. Like, a lot of these guys, instead of playing video games, a lot of these kids are starting to invest right out of college and becoming millionaires before 30. So if I had known 20 years ago what I know today, things would have been a lot different.
All right. Thank you so much, Chris. I have to go get to my webinar now, but remember, I never forget that woman who were in the investing masterclass, and she was like telling us that her husband wanted to retire, or he didn't want to work anymore, and she spent her life taking care of her 5 children or something like that. And she's like, well, you know what? I have to make it somehow. And she started her own business, remember, at 65. And now she's doing her own master classes, and she's absolutely rocketing it. And she was a mom, a housewife, her whole life, and she started her investing career at 65. She was like such an interesting character and such an interesting woman. Yeah, that inspired me a lot. I'm like, well, we all can do that. All right, thank you so much for the presentation, and we're going to share my YouTube channel, your YouTube channel, and we're going to wait for more videos, and whoever want to talk to you, they can always reach out, right?
Absolutely. Yeah, don't hesitate. Yeah, I'm there on Facebook, and my email was there earlier. So just reach out and talk to me.
Thank you, ladies, for coming, and talk soon.
Bye-bye. Oh, yeah, don't forget to share this. If you know someone who can use this information, definitely share it with them. Maybe they weren't able to make it today, or they don't believe that it's possible. Share this video with them.
Thank you. Bye-bye.